Never had these. These things are good.
You know, those go sparkling ice.
Yeah. All right.
Let's do it. Ready to go?
There you go.
Good morning, everyone. Welcome to our educational event. Here with Daniel today. Our subject matter today is understanding our statements, which we get questions about all the time. And Daniel's going to do the presentation today. He's going to have several pointers and some slides for you to actually see different types of statements, whether it be annuity or insurance companies or Madison Avenue statements. So it's a clear understanding of trying to navigate through them and figure them out. Before we get started, though, we want to remind you of a couple things. Our next educational event's coming up on August 27th. Here's a flyer on it. You should be getting this shortly. It's on family history 101. We have a special guest speaker that's coming that's very versed in family history research. And not only that, for those who attend the live session, we're giving away 2 Ancestry.com and DNA kits. So those are fun. My family went through that recently. It was kind of interesting to see your roots. So anyway, that's upcoming. I also want to remind everyone that this quarter, anyone that refers us will be getting a token to get in the drawing for a couple of Chef James Barwick's fabulous desserts. So remember that. So I'm tasting that already, Daniel. I can't
Delicious.
wait. I need that. My sugar content needs that as well. Y'all have a great time today. It's good to be in front of you, and we'll see you in a couple of weeks. Daniel, let's begin this presentation.
All right. So everyone, you should, I'm about to pull up the presentation here on understanding your statements. And what we've done is given several different views so you can see different types of statements. And I want you to be able to ask questions. There's a chat box you should be able to see. I see a lot of people are saying good morning over there. Got Joyce, Roger, Robert, Rick Wilson, Gary Leahy, Anita. Good morning, everyone. So please ask questions. So this can be very interactive. Anything you have questions on about your statements as we go through, I'll be able to see the questions over here on the screen so I can answer them for you. So we're going to dig right in, and the point of this is to have a better understanding of how to read your statements and what certain terminology means, because different companies may use a little bit different verbiage to say the same thing, and so for some people that can be confusing. So let's dig right in. So this is our agenda today. We're going to try to understand some key terms and concepts. And also, we want to make sure you know how to read various types of statements, how to consolidate your statements and what that is, and also online account access. At the end of the presentation, I'm going to share with you some documents that you'll be able to download directly from the link that I share. You'll be able to see the download. One of them is a guide to understanding your statements from Pershing. The other is a NetX Investor online account access where you can sign up for paperless statements and consolidate statements. So if you have multiple statements at Pershing, you can consolidate those. We try to do that for everyone, but sometimes people choose to do it later and don't want to start it off paperless, but you can choose to do that anytime you'd like. So first, we're going to look at brokerage statements from Madison Avenue Securities and a clearing firm, Pershing LLC, who is the custodian. Just to understand the relationship, Madison Avenue is our broker dealer. They're based in San Diego, and they're who we submit our trades to. They're provide us back office services and help with all kind of different issues we have. They're fantastic. And Pershing is a clearing firm. A clearing firm is like a large bank or custodian that holds assets. They have to report to the IRS if you have an IRA. And basically, they're the platform that we can make trades, places trades for securities on. So let's take a couple of things here. First of all, you can go to these websites if you want to register for online access. Most everyone has online access either through NetX Investor or through eMoney. eMoney is a website that consolidates different accounts, and you can see them all in one location. So If you haven't signed up for online access for Pershing, you can do that, and you need to know that the organization number for us is HKA. They're going to ask for the organization number, and we can walk you through this too. Anyone that needs help, we're happy to help walk you through the process. So for your convenience, you have options on how to receive different brokerage statements. With online access, you basically have access to download all your different statements. It goes way back. You can look back years at different statements, and you don't have to worry about getting paper statements. If you're able to log on, you can look back way back, and you don't have to save those. But if you don't log in once every 120 days, you'll have to set up. You'll have to get locked back. You'll be locked out, and we have to have it unlocked. So you can just contact us or Madison. Just contact us, and we'll have that unlocked for you. And that happens from time to time if you don't log in for a few months. This is what it looks like when you go to NetX Investor. You can see the first thing on the top right. It says financial organization number. That's where you put in HKA. Then you put in your user ID and password. If you need an ID, you can see here it says register. Down at the bottom right, you can register and sign up for that yourself. So that's what it looks like when you get to the website. Now, we've encouraged people to go paperless because Pershing has decided to charge $1.25 per statement. And certainly if you don't do that, and you have more than one account, you want to consolidate it so you don't pay that for multiple statements. If you already have online access, you're not paying this fee. This is why we've encouraged people to go paperless with Pershing because of the fee. That's one of the main reasons that they want to conserve paper and save money. So that's why we've been encouraging that. And Select Link is an option to have all your statements consolidated into one envelope. So instead of having 5 different statements, we have some families that have 5 or 6 different accounts between husband and wife and college accounts for their kids. So instead of having to get different envelopes, you can get it all in one consolidated statement, which I think is much more convenient for you to be able to use. Now, if you haven't already done so, which we always do, we want to make sure you understand how to read your statements. And so when we do reviews with you, please ask us questions. It's better that you understand how to read them, because then you'll feel more confident and understand that how each statement reads and the different terminology. So we're happy to help you with that. Here's a couple things to look out for. If you have non-qualified accounts, meaning not IRAs, if they're not a Roth IRA or a traditional IRA, if it's a brokerage account, you need to make sure that your cost basis is provided. So if you ever see on your statement, which we try to catch this for you, but if we don't, if you ever see on your statement, please provide. Basically, they're wanting you to provide missing cost basis. And what a cost basis is the original purchase price you paid for a particular security. So without that, there's no way to know what your taxable consequences may be when that's sold. So if you ever see please provide, let us know so we can help you find that. And covered versus non-covered cost basis, what that means is several years ago, a regulation was passed that says custodians have to keep up with your cost basis. But if you bought a security prior to that date, that means it's not going to be covered, and we'd have to help you hunt down at your old brokerage firm what the cost basis was. It's possible to be on an old statement from them. We can also call the financial institution. But if it's something that's been set up in recent years, the last 3 or 4 years, then that's going to be covered. And custodians from now on have to keep up with that for you. That's part of the reason they charge fees, is they have to keep up with the cost basis and provide information to the IRS on your IRAs when you take required minimum distributions. So some helpful tips to better understand your statements. Again, if you have any questions, I can see right here on the right side of my screen. Please just type them in there and hit enter, and I'll be able to see your questions. But Pershing has provided us, and we're going to start utilizing this more and make sure that you guys have access to it, Guide to Understanding Your Brokerage Account Statement. When I'm done with the presentation, I'll pull that up so we can kind of take a look at it, and I'll share it with you, and you can download it as a PDF. So this is a guide that helps you understand a lot of different situations and terminology. Not all of it's going to be relevant to you. You can also go online to NetX Investor, and we already talked about setting up e-delivery. I'm going to provide you with how to do that in a document to walk you through that as well. So let's dig in here to the Pershing statement. What you see, this is a statement from Pershing, and you can see hopefully the different terminology here. Most importantly, you're going to want to look at the date. You're going to look at your beginning and ending account value, and that's over on the right-hand side. The beginning account value is the value that it was at on January 1st in this particular case. Ending is what it was worth on January 31st, and you can see that there's different variables that change the values. You got dividends, interest income, other income, and then fees. So we have different types of clients. Some of them are in our fee-based accounts, which we encourage because there's a flat wrap fee and it keeps trading costs lower. And then we have brokerage accounts. So if your account number starts with QYM, that means that it's a fee-based account, and that simply means that there's a fee assessed on the total account value, and our incentive is to grow your account, and it includes all trading costs as well. A brokerage account starts with HKA. If it starts with HKA, it means that it's a commissionable account and it's not a fee-based account. There's certain limitations on account sizes as to which ones you may fit into and the values of those. So we've got the beginning and ending account value. Fees, if you're paying fees in there, for example, for a management fee, you would see that come out. Those come out quarterly, so 4 times a year. And then underneath that, you can see asset summary. You've got different classes of assets. In this particular case, 3% of the portfolio is in cash, money market funds, and bank deposits. 66% is in equities, and 31% is in mutual funds. So there may be different types of asset classes. This particular account, that's the type that it has. You may see something on there that says bonds, or you may see on your statement one that says exchange traded funds. Those are just different types of asset classes, and this shows the breakdown. So let's see here. Yeah, you can definitely get a copy of this. I see somebody says audio coming in and out. Hopefully you can hear me. So let me know if that continues. So on the next page of a Pershing statement, you can see short-term, long-term gains. Short-term gain or loss means anything bought or sold in less than a 12-month period of time. There's different taxation for short-term capital gains or losses. Long-term gains or losses means that you've held the particular holding for over 12 months. And so unrealized means it hasn't been sold. If the securities or investments had been sold within a 12-month period, you'd see a realized short-term gain or loss, meaning that we sold it prior to a 12-month period. And then there's long-term gain or loss. That means that if it's realized, it means it was sold. Unrealized means you're still holding it, and whenever it is sold, it will be a realized long-term or short-term gain. So just want to give you some clarity on what that means. Below that, you can see income from dividends, equities, money market, and you can see the amount of taxable and non-taxable. Of course, that depends on if you're an IRA. If you're inside of an IRA, you're not going to have taxable dividend income, simply because whenever you don't get taxed on an IRA until you make a withdrawal. So then you can see your representative, and your investment objective is right under that. Investment objective in this particular account is growth and income, and this person is high risk. Just because it says high risk doesn't mean you're necessarily taking it. It just means you can hold certain securities in there that may be considered higher risk. It doesn't mean we're going to invest your whole account in high risk securities. So below that, different taxation, bond amortization, those are a little bit more complicated. And then it shows whether or not you've opted for electronic delivery. So that shows there. And moving on through the statement, we can see cash and money market funds. They represent 3% of the portfolio. Opening balance, closing balance, that would show the increase. If dividends came in, you would see an increase in the money market account if those are being paid to the money market. And then you can see the different types of investments. This isn't very clear, but this says AT&T.com. So let me explain what these different columns mean. So this would show your stocks, your common stocks that you have here. We've got the quantity, the unit cost, that's what we paid for it per share. This is the cost basis. And then this shows the current market price and market value and whether or not you have realized or unrealized gains. And the last column to the far right is estimated annual income. That's the amount of income you'll get based on the dividend yield, which is the last column over here. So AT&T pays 5.3%, or it did at the time when this was statement was printed back in 2018. But yeah, you can see all the different categories. Just wanted to explain how that works for you. Any questions on that? So we're going to move on here. This is just a continuation. So this particular account owns different stocks, and you can see them. You got Walt Disney. You got the quantity of stocks, that are owned. 103 shares of Disney are owned in this account. We bought them for $95. And so the total cost basis into that particular position is $9,829. Then you get your current market value, $11,193. It means that this has gained $1,363. That's the unrealized gain. That means it hasn't been sold yet, so that's the unrealized gain. Just helping familiarize you with different terminology there. And let's skip down to mutual funds. So this shows different mutual funds here. This is Power Dividend Index Fund. The quantity of shares that were owned, the cost basis, what was paid for it again. So it's the same type thing. Mutual funds are just funds that own a lot of different stocks together, and sometimes they're managed differently. So we use exchange traded funds that can go into more conservative positions if the market starts to perform poorly. So at the end, you can see total portfolio holdings, the cost basis, the amount that was paid for, market value, and then your total unrealized gain or loss. This is the important part where you can see how much has been earned over the period of time you've had the account. So this is the best place on the statement to see how you're doing. You've got the total cost basis and the market value is what's currently worth. Unrealized gain of $39,006 on this. So just wanted to explain that to you. This is the best place under total portfolio holdings at the end of it to see how you're doing. And you can also see a handy figure here that shows your estimated annual income. That's the amount of money just from dividends that would be paid. And so you can see that at the end of the statement there on total portfolio holdings. Well, actually, it's about halfway through the statement, but that's what it's called, total portfolio holdings. Then we have different activity summaries. You can see under activity, dividends and interest, credits this period, shows how much dividends were paid during this month. Fees, so this was in January, and this is you pay fees quarterly. So you can see that this is an account that we take out quarterly management fee, and that comes out there, and you can see the amount right there under activity summary. And then it's got your totals, and that would be available right there. And you can see any transactions that were made. Now they're going to show you dividends under transactions. In my mind, it's not a transaction. It's the receipt of a dividend from a company. Transaction would be a buy or a sell. It would also show that if anything was bought or sold. This shows different dividends that were paid from companies: Philip Morris, Disney, Franklin Resources, and Omnicom. And then this is the advisory fee, also listed under transactions for this month. This shows underneath cash not yet received. Sometimes companies have a dividend paid and it just hadn't hit the account during this statement, and it'll show the next date that it would be paid. And at the bottom, we've got the money market fund and the current yield on it. We know yields on money markets are very low. Just so you know, we're going to provide this presentation to everyone. So when it's done, you'll be able to, I'll share it and you can download the presentation. All right, and so then this is just wrapping up the money market and different deposits that were made through the month, or debits that were made through the month of January. So you got money fund purchase and redemption. That would be show your fees coming out, but also show you deposits from dividends coming in. All right, so now we're going to move. Any questions about a Pershing statement before I move on to different types of investment products? Just wanted to kind of show you how it all works. And I want to reinforce one other thing here one more time. So if the best place to see how you're doing, and since you've owned the account, is where I showed you just a moment ago, is on page, let's see. Here we go. At the end of your portfolio holdings, it'll show your cost basis, market value, gains and losses. So that's where you can see how the account is doing. And to me, that's easier than looking at a previous month statement and comparing it, the balances. You can see it right there in your portfolio, in your statement, excuse me. All right, so we're going to move on. Now we're going to just touch on a couple of different companies. Now, Allianz is not a security. This is a fixed index. This particular one's on a fixed index annuity. And we use these in many cases for more conservative positions in the portfolio. They're principal protected products, meaning you can't lose your principal with them. And that's one of the reasons we use them. It's a great place to take out income. We have a question here from Joyce Treadwell. She says, I have digital set up with NetX, but received 2 notices recently to go digital. How do I change that? So if you have more than one account, they may be telling you to that you can also sign up for digital statements with the other. We'll have that checked on for you, Joyce, and so you can make sure that you don't get any more of those. I'm not sure why you're receiving them, but we'll look into it to see. Because you've already set up, you shouldn't still be seeing notices for digital statements. All right, so Allianz. Let's just talk about some terminology with fixed indexed annuities. When you look at the statement from Allianz, you can see the name of the product here is the Allianz 360. Tax plan type would mean, is it a Roth IRA, a traditional IRA, or non-qualified? And this one is an IRA. Contract date means what date the investment started. So we can see right there, this one was January 28th of 2014. And this describes what's inside of the statement. So let's look here. It's kind of blurry, but you've got beginning. This says beginning balance on February 28th. Interest credited would be interest that was added over that period of time. Now this one has called an income benefit rider, which companies charge for. So you can see that if there's a fee assessed, it would come out right there. The reason for that is this particular one provides guaranteed lifetime income. So they debit that off the total balance. So you would see it subtracted out before you can see the accumulation value. So what accumulation value is the total value of your account as it currently sits on that particular date. There's other terms. One is called the cash surrender value. That would be if you turned in and took all the money out of the investment early, you're not going to get your full accumulation value, because we know that these products have different time periods associated with them. You have to keep them for the whole time period to not have a penalty assessed. So cash surrender value is going to be different than your accumulation value. Now, with most of these products, we can take free withdrawals anywhere from 7 to 10% out each year with no penalty. So we rarely, if ever, have had someone take a penalty from taking a withdrawal. We make sure to keep plenty of money in liquid investments in case of emergency. But just wanted to explain the difference between cash surrender and accumulation value. Now this explains here below how your accumulation value is allocated. There's different options we can choose within the investment. This one has the monthly sum from S&P 500, and below it the Barclays US Dynamic Index. So it's split between the two, and it would show strategy earnings here right there on the statement. So that shows you which strategies you're in. Now Allianz has strategies that are for 1 year. meaning whatever happens from the period of time. This one started January 27th or 28th, 2017 to 2018. They're going to look at how those two indexes did over that 1 year period and then add your interest. Other companies might have a 2 or a 3 year period of time before the interest is added, but we can choose to trigger the interest to be added earlier. But in Allianz's case, it's a 1 year point to point. This one has lifetime income withdrawals, so it shows the person's age is 64. He's had it for 4 years, and each year he keeps that, he gets a bigger piece of income out if he chooses to turn on the income. All right. Now we're looking at cash surrender value, and that's what I just described. That's if he turned it in early. So his cash surrender value is $339,350. Below is the death benefit value. Now, if you pass away early, they're going to credit. They're not going to penalize you. You're going to get the full accumulation value for the death benefit, and so the death benefit and the accumulation value in most cases are going to be the same. Sorry if I'm being too thorough. I just want to make sure you understand these different terms. Now, for a few people, you may have life insurance. Life insurance has also different terminology. Some of them overlap. So this is an Allianz life insurance policy. And you can see accumulation value on the top. That's how much the value is inside of the contract. And you can also see you got premium paid, interest charges, insurance costs. There's a lot more moving parts inside of a life insurance policy than inside of most of the annuities that we work with. The face value of the policy is the amount that it's worth if you passed away. Accumulation value is going to be the cash value inside of the policy. So I'm not going to spend a lot of time on that one. These are all different index options that we can choose each year to invest in inside of the contract. All right, so now let's touch on another one, because we have people that have the different companies, and there's no way to do all the companies that we have, but just want to, there's a few different terms that different companies use. So accumulation value is typically what you're going to see from most companies, but Athene and Nationwide will use a term called balanced allocation value. Balanced allocation value is basically what the account is, where it's at, but you have the option to lock in those gains with some of these companies earlier than the annual anniversary date. So balanced allocation value is going to be slightly different than the regular accumulation value, the way that they calculate it. So that's the difference between Athene and Allianz. Allianz does not have a balanced allocation value. They just have regular accumulation value. Nationwide, again, going to look at that. So we've got beginning contract value. You can see if there's been any withdrawals, any charges. So if you have an account that has a guaranteed lifetime income rider, you're going to see those charges on there. Then below, you're going to see which investment strategy you're in. The JP Morgan Mosaic Index is the one we use most frequently because it's uncapped, meaning you have no max gain with that particular one. So we can see that. Let's see. But I was going to mention that Nationwide also uses balanced allocation value, and especially if they have an income rider, an income benefit rider, that balanced allocation value is always going to be higher, almost always going to be higher than your accumulation value, because it uses the high point that the index has ever gotten to calculate your income. So your balanced allocation value is going to show you how much where your income would be calculated off of. So that's the one you want to pay attention to with Nationwide if you're using it for incomes, the balanced allocation value. Okay, so before I pull up the documents I mentioned, are there any questions? Anybody have any questions at all about anything we've covered? Now's the time to ask. I'm looking right here for them. No? All right, so let's see here. I'm going to pull up a couple of things here. Let's see. So first we're going to look at guide for, you're going to see hopefully you'll be able to see here where you can download Guide to Understanding Your Statements. I'm sharing that with you now. So tell me if you can see that. And then I'm going to pull up here and show you what it looks like. So the Guide to Understanding Your Statements, when you get it, it's pretty comprehensive, and it's not going to all be applicable to you. So it may not be something necessarily that applies to your account, but you can see when you get in there, there's a table of contents, and feel free to download. Can everyone see where I shared it? Looks like Ray said yes. No, no one said anything. So can you see the statements where I shared Guide to Download Statements? You can? Okay, so download the statements there, and you'll be able to see that. You can see there's a table of contents and all the different options you have. So if you wanted to, for example, if you wanted to look at portfolio at a glance, let's just go to page 7. And what it's going to do, it's going to explain to you a lot of the things that I've just went over. So you can see the value over time. It's going to show that on there. You'll be able to see what your statement looks like, an asset summary. It explains all the things that I just did, but if you want a reference guide, so in case you forget it, now you've got it. So I've shared it with you. Please download it and use it as a reference to help better understand your statements. So now I'm going to go back and share one more with you. This is the guide for e-delivery. So if you don't have e-delivery or electronic delivery for your Pershing statements, I just shared that with you as well. So I'm going to go ahead and pull that up so you can see it. So this is a guide for how to enroll with your electronic statements. So it's pretty easy. It walks you through the process. It's only 2 pages. So I've shared that with you now as well. So if you don't have electronic delivery, I would recommend, if you're comfortable, getting it so we can help you save $1.25 per statement. If you choose not to, at least consolidate, if you can, your statements, and we can help you do that. This explains how to consolidate statements as well, I believe. So you'll be able to see all your statements all in one package. That way you won't pay as many fees there. And any questions so far? I've shared both of those documents with you. Just click download and you'll be able to download them. And I'm going to go ahead and share the presentation as well. So the presentation that I just shared with you, now I have sent you a link where you can download that whole presentation for your own reference. So that should be coming to you momentarily. Let's see. Will you cover Select Link? So I don't have any documents on Select Link, but what it is it's a way to consolidate your statements. So I'll tell you what, the questions from Roger Moeller, we'll be able to, I'll have someone reach out to you. But for most people, we automatically consolidate your statements where you don't have more than one. I'll double check for you, Roger, to make sure you're already set up on that. But they didn't give me any literature to share for Select Link. We got a question here. The $1.25 is only for Pershing. So Pershing and Madison, they have a relationship. So Madison's our broker-dealer. Pershing is our clearing firm. So Pershing is being charged by Madison. Pershing's fee is being charged by Pershing, not Madison. Pershing is getting that $1.25 for mailing out the statements. It's not a fee from Madison. It's a fee from Pershing. But it is on your Madison accounts. So our Madison accounts are held at Pershing. So that is only for those accounts that are held at Pershing, Ray, to answer that question. All right, good questions. Anything else? Anything else I can help you with before we sign off? Okay, well, we've got a couple things to follow up. Thanks here, got all 3 downloads. Appreciate that. So please reach out to us if you have any questions. And if not, we'll go ahead and close out. Thanks for being on the webinar today, and I hope this has helped you a little bit in understanding your statements and some of the terminology. Everybody have a great day and stay safe out there. Signing off.